So welcome to Friday morning, the Friday morning edition. And just want to make sure, double checking real quick that my live stream is on, and it is. That's a beautiful thing. I'll make it public, so if anybody needed to log out or whatever, you got to go to work. I did make our YouTube live stream live. Obviously, there's not going to be any comments in there, so if for some reason you need to get in there, feel free to rock and roll. What else? Happy Friday to everybody. You know, we've got a bear with me 2 seconds. I'm just doing a little bit of housekeeping here real quick. There we go. Just going to send out a message to everybody, telling everybody, come on in, let's play. All right, so two things we're going to spend a lot of time on today. I should not say Let me try to stop that early. You have to have something that you're shooting for, right? You need an objective. And I think a lot of people, they start trading and tell me if I'm off base on this, but a lot of people start trading and they just say, I'm just going to trade and make a bunch of money and be done with it. And they don't really have a specific objective in mind. And a lot of people trade for the sake of trading, and they want to make money. And what I want you to do is I want you to start focusing or thinking about what your objectives are. And again, I wanted to kind of lay out a plan for those of you who are new for the first 30 days and beyond. I know there's a lot of stuff that happens on the charts, but there's only a few things that, there's no such thing as a guarantee in this business. But there are some things that can really, really, really push you in the right direction. Making sure you've got a good high probability trade before you actually pull the trigger. Number two, the other thing that I haven't really spent much time with because my brother has so much, but for new people, it's really, really important that you guys spend a lot of time on study time. And more specifically, when we talk about studying, it's not just study for the sake of study. I've spent an enormous amount of time this week talking about the trigger line and Fibonacci looks when it's okay to actually take a trade. And, I think a lot of people have gone loco this week. I've seen a lot of pictures that people send to me on momentum trades. And they're doing momentum trades all over the place. And, it's not that you can't do momentum trades all over the place, but specifically you want to be centered around those Fibonacci areas. So this is where not only you have to learn the looks, but you have to go back and you have to simulate and do market replay. And you have to post in some pictures to class, to me or to my brother or whatever, and just say, hey, am I doing it right? These are my rules. This is what I intend to do. And am I doing it right? Our software is worth every penny. It's worth a lot more than what we charge for it. If we could interject all of the knowledge and experience we have into you on day one, we'd have to charge $100,000 a copy for software. The only reason we don't get $100,000 per copy is because you guys have to fill in the gap and build your experience. If we sold the experience with it, the experience would be invaluable. But you can have it for free. It just takes time. And I want everybody to just please, please, please be patient. You will not learn $1 million a year profession in a week or 2 weeks. And I don't want people to get frustrated. Trading is one of those frustrating things. Tell me if I'm off base here, but you see it, you see everybody else doing it. When it's right, it's really easy. And when you're forcing it, it's the most difficult thing on the planet. Trading can go either way for you. And it's our job, your job, my job, every other trader's job to narrow in on what's most important to you. So it starts with a goal, So look, I want everybody to just tell me how much money, if you could make $1,000 a day and do it every day, would you be happy? So let's everybody just type in your goal into the chat room and say, I want to make 500 a day or 1,000. What's your first, not the end goal of where you might see yourself 10 years from now, because that's too much. Something that's realistic, that makes you happy, even if it's $400 a day, whatever it is, I don't care, but type in your goal on how much you want to make a day to be happy initially. What's the minimum that we need to get you to in order to be happy? And if it's 1,000 a day, this is where, let's just call it 1,000 a day. Okay. Which if you trade, 2 contracts, I think, somewhere in the neighborhood of 400 to 1,000 a day is very realistic. And, again, I put this trade on a little bit earlier. I think it's a really great trade for class. This is how I kind of wanted to start the day. Let's say my goal is to make $1,000 a day. This is it. I'm done. And again, I want you to think about why. And I want you to see something. When you're new, for us, don't we always go back in and say, oh, if you would have bought right here, you could have made a bunch of money. And you see this look a lot, right? We go back in history and we draw little circles on it. And we say, oh, if you only would have done this, you could have made that, right? Everybody agrees. Strong triggers, buy the Fibonacci support. I mean, that's basically our look. Here's the problem in the real world for new users. And I did this trade very specifically. I've done this over the years, but at the time you're getting in, the bar looks like this. This is where the mental or the anticipation of what's supposed to happen allows you to get paid. And if you wait until it's already happened, it's too late. So when we're buying the market, you've heard the old adage, buy low, sell high, right? So the idea is the market has to be coming down and it's going to be a red bar and it's going to look like it's going down in order for you, okay, I like that. 1,000 times 20 accounts, absolutely. But you got to make it on one first and then you can go back and you can add on more, right? So anyway, again, we're going to hyper focus one more time today on the looks and the consistency of the looks. And again, I want to talk about pitfalls of different looks. I want to talk about, because you can see this one, this is the after the fact, right? And it looks easy, right? You say, oh, yeah, of course, I would have bought right there. And when you're getting into the position, this is what it looked like. So realistically, on the right edge of the chart, that's not the easiest look for you guys, is it, to go long? I mean, it's scary. And most of you would probably go long here and not here. Now, the reason why I was looking for farther away is because, again, number one, the large chart said it was going to be a little farther away. But number two, there was divergence before the trend trade long. And if you got in early It's okay. You just had to have a much larger stop, which is okay. You just have to recognize that you need a larger stop. So look, stop placement. Look what I did over here. I just want you to see this because you have to have, number one, a look, but you also have to say, this is as far as I will possibly let it go. And this is where we use these little reversal bar markers on the larger chart, because realistically they could make one bar down, but they shouldn't really make a couple of bars down, or else the probabilities are going to be over for us. So because I took this picture, there's two things about it. Number one, you have to buy on the way down, and it's scary because the bar is going down and you don't know if it's going to go up. You hope it goes up. Number two, you have to be able to get better at saying, this is as far as it can go before my odds are not right. So look what I was basically risking only 3.75 points. Why at the bottom of the window and not the top? Well, because there was divergence on the small chart. So whenever there's divergence on the smaller chart first, it has a tendency to go a little bit further. Now, the other thing that, let me see if I have the picture. There was also divergence on this one. So there was divergence on two charts. And look, if you had gotten in here at 50, and again, look, there's a few thought processes for getting in. Let's talk about them. And look, we got to make a rule. You guys have to make a rule for yourself. And we can talk about, again, this one's pretty easy for the NASDAQ. Usually on your small charts, if you have divergence, I'm going to help you make a rule, okay? And you can get in earlier. You just have to have a bigger stop. But typically, can I put typically? If divergence, then it goes a bit farther down. I don't think that's a big stretch for anybody, right? So typically it goes a little farther down. So when you're looking at your areas, you're like, okay, if it goes a little farther, how far can it go? The other thing that I think could be beneficial for a lot of you guys, which maybe you're ready to use this, maybe not. I hope everybody builds a range bar chart and uses the market flow. And a lot of times when you see divergence on more than one chart, waiting for a signal, which again, if you go through our market flow material in the user guide, it says this. All right. So, and again, there's different circumstances and different issues, but when I look at this chart, the other thing that pops out to me, and look, I am a big, big, big fan of my market flow chart. So if you were to wait for an up bar, just an up bar, forget about a signal. Okay. Don't even worry about signal. Usually it is a signal if it's from the right spot, but even if you just waited for an up bar, it kept you from getting into early. So again, this is just one of those situations where you have to kind of say to yourself, again, I'm going to leave you with this picture just so you guys have it. Is everybody okay with this? And again, the NASDAQ is one of those ones that's pretty specific about, if there's divergence, if you have a choice of multiple choice of areas, I guess is the best way to put it. I mean, you really have not a lot of choice. I mean, the only place where we were making a deep enough pullback to get in is kind of at the fibs. So I want you to focus on one chart before, I said this yesterday, and again, I want to beat this up, but let's say you only get one chart And who was I telling this to yesterday? I totally forgot. My brain kind of went out, but I said if the large chart doesn't have the right look, then it doesn't really matter what the small charts say, because you shouldn't be looking for a trade. And this is probably going to save you more money than any other one thing I can teach you today. If the large chart doesn't say you should trade, stop staring at your small chart, because you're getting hyped up, you're wasting mental energy, and you're going to end up doing trades just to see if they work. You know, have you ever said that? Let me just see if this works. Now, after yesterday, let me ask you a question. How many of you went through and said, if I have divergence and a lower divergence, I'm going to end up doing the next trade and expecting more out of it? Did you guys go through and start studying this pattern? And again, I just want to go on the record. We're not trading for all of the time. We're trading for what happens most of the time. I started golfing when I was 30. So I started late in life, and long story short, my very first lesson was in Houston at Memorial, and Hut Smith was the instructor. And he said, all right, John, what are your goals and objectives for what we're going to do here with your learn how to golf? And I said these words, I swear to God. I said, I want to be perfect at golf. That's my objective. And he laughed. He laughed so hard, because that's like, a new day trader coming in and saying, I only want to make $1 million a month and I want to do it quickly. And again, unrealistic expectations create frustration. So we have to have some realistic expectations. And he said to me something that I've said ever since that day for the last 23 years. I've said this over and over and over. Golf is a game of who can miss the least, not who is perfect. Because I guess a perfect round of golf would be 18, right? Hole in one on every hole. Statistically, probably not going to happen. Ever. So, if you think of day trading as the same way, it's a game of who can miss the least. You're going to miss some trades and you're going to make some mistakes and stuff like that. But as you get better and better, those mistakes are going to start to dwindle. So anyway, look, this is another one. I just wanted you to see this. Look, if you're up at 4 o'clock this morning, you're probably going, hey, short, and maybe you took a short here, and then it gets to fibs, and then eventually we get a second divergence and it breaks through, and this right here is the most beautiful look ever for going short. Because in the real world, this is what it looks like. So do you see what I'm saying? Divergence, lower divergence, strong triggers, lots of room. We're at least thinking we're going to get to the second lines. That's perfect. And it loses. I don't know exactly what happened in here, but overall it didn't finish. So again, don't over expect something, right? Expect, did you guys watch the Mark Douglas videos I put together? By showing you yes or no, if you haven't, if you haven't. But in this video upload section, I did crunch them all together into one big one. And every time you put a trade on, you have to expect something to happen. But you better not expect to win every trade. I mean, I kind of expect to win every trade, but it's okay if I don't. Because every trade I have, more importantly, has the odds in my favor. And if it doesn't go, it's okay. As long as you wait for the right look, you're going to end up with the right trades. And as you go back, and you look at this, then we ended up with divergence and a higher divergence, which, this is again where you start thinking to yourself the same thought we just had just a little while ago, which is, if I get divergence and the triggers roll up, it's not that you're not doing earlier trades. You can. But then after that second divergence, and then even more importantly, when fibs break, you start thinking about, the market's going to go a lot farther. And it doesn't always do it, right? So, again, the market doesn't always behave 100%, but most of the time it does. And, ultimately we ended up getting close to resistance, which this is very, very, very typical. And then eventually support holds, so we're not going short, even though we have a lot of divergences, right? Again, you can't just say, oh, look, a second divergence, I'm going short. You can't break the rules. It's still support. And when you get to support, you have to ask yourself the question, how many triggers are below it? And the answer is none. So they went up and did one more whoop-de-whoop to the long side, and then now they've stopped. All right, so we've put in some fibs that have 0 triggers above it. So that's it. Party's over. Does everybody understand that? You hit, and you don't know which fib it's going to be, so we just let the market dictate to us. And so look, that's the one that's the top. Now, you could go and look at a larger chart or something like that, and you could say, can I layer together a couple of different things, right? So again, look, this is where, if you use a 55-8 chart, which a 55-8 chart on the NASDAQ is the equivalent of traders using a 21-3 chart on crude oil or S&P or gold. It's just the next step up. And sometimes when you step back and you look at the big picture, right, you kind of get this. You're not going short as readily as, so I want you to kind of see, and again, I'm talking about building in, the things that you're going to do later as you start to get your read. So let's go back. And again, I use the larger chart and I use also a market flow chart. But remember right here where we were saying divergence and a lower divergence. And then right here we said, hey, perfect. Oops. Right. We said to ourselves, perfect look for shorts. And we said it didn't win. And again, as you start to work your way through, adding in a chart or two, you're going to look back at that perfect look for shorts and you're going to say, okay, was it really perfect if I used a little bit of a larger chart? Remember what I said yesterday about 50-50s? They almost always happen at the mid bands after a strong push up. And this is, again, on a larger chart, another case where the larger chart really did help out a lot, right? We had a strong push up. We barely got through the mid band, and then the market resumed trend. I think personally it's nice to have that, from half a mile up view so you can kind of see where we're going. What's the big trend? Because you can't fight, the big trend. You can, but it just becomes difficult. Now, the other place where I was going long earlier on that chart was also right here. So not only did we have the long trade, that we were just talking about, but it happened from right here. And then the next one happened from right here. And it ends up, again, from a larger chart perspective, it makes sense on why we weren't going down yet, right? Because we had some unfinished business and we didn't really make it up to where a good top is. So now that we've hit the fib on the, on the 34.5 chart, we also at the exact same time have weak triggers and a pivot stop out. So we've started the process of actually making a short-term top. Just on the biggest chart, which allows us to go to our next smaller down chart and say, okay, now what are we looking at? Do we have odds to do anything yet? And the answer is not really. So it is NASDAQ 5 minutes before the open, so there's not a lot to do yet. So number one thing for the day for you guys, and I think this is going to be super, super, super important. Making sure that you're looking at your large chart first before you ever even think about looking at your little charts. Because the tendency is to get in here and go, okay, I'm looking at every little dot and, trying to figure out, is it here? Is it here? Is it here? Is it here? And you're going to end up driving yourself crazy by only looking at a smaller chart. So that's going to be our day. We're going to do large chart first. And if the large chart says, hey, we should be doing something, then we'll talk about it. So, again, that's this area right here. Should we be doing something? Well, in the NASDAQ, the answer is no. 4 minutes before the open. You shouldn't be doing anything. All right. So I also pulled up gold. I know they just rolled over to the December contracts. So they ended up, look, when gold trends, it trends really, really, really well. So anyway, I just brought up a big chart of gold because some of you guys are trading it. And I just wanted to have it in case we needed to look at it. So look, let's do gold. 21 is the range chart for NASDAQ. So let's look at gold. What can we say by only looking at a big chart? The downtrend is over. 100% unequivocally. For now, there's no way you should be thinking anything else. If you're anything, you might even be in a trend trade long on gold. Anybody trading gold long? I'm just curious. If you did it, you did the right trade, and that was probably your first profit target. $21.3 is still bearish. Okay, so that means that it'll be a trade that goes up and makes it to the first target, but maybe not the farther away target. Which is okay, which means they'll probably hit the mid-band. I could draw out the future for you. Hit the mid-band and fib, and then they're going to come down here, and then they're going to go up there. I'm just going to throw it out there. That's a potential. We'll see what happens. We can check predictions later. Traditionally, after a down move, you're going to get that pullback. They normally don't just make a bottom and then streak. I mean, sometimes they do, of course, but most of the time they make like a double hitch, where they go down. They say, okay, now it's, and the reason I say it's a good bottom now is because of what happened at the low. Look, let's dissect it chart reading style. So we had 3 fibs. I mean, these are kind of far away from each other, and this is really good for chart reading for new people. You don't have to know which fib is going to hold. You have to wait until the fib does hold, and then we can start to say that this fib is the bottom. Now, why is it the bottom? Because we ask ourselves one question every time we get to a fib. Remember the question? How many triggers are below it? That's all you need to know. How many triggers are below your fib? Once the answer is 0, it's over. Now, it doesn't mean they can't break and then start over. But once the answer becomes 0, it's over. Let's look at it on the NASDAQ. Same thing. Remember up at the top, we said, again, how many triggers are above this fib? And this is the fib that finally answers the question with the right number, 0. Does that make sense? So again, hopefully this will eliminate some confusion for new people on which fib is the one you're supposed to be looking at. Same thing here, right? Watch. How many triggers are below this fib and midband? There's 2 things there. 0. So you can't go short. Now, only after some type of condition and really strong triggers, that's when we're looking to trade. All right, so like I said, on the NASDAQ, we have a 0 triggers through. That's the top. It's over. No more long trades. So look, right now, answer the question. How many triggers are below this fib? 0. So potentially that's a bottom that might stick. And then you have to ask yourself, after a bottom that might stick, is it worth it to take long trades once all my triggers roll up? And again, it's first couple of minutes of the market, so it's usually gets a little volatile in there. You guys want to watch the volatility? And again, look, you can see where it kind of came together. Now look, we have divergence. What's going to happen? Remember what I told you guys about divergence? It's usually going to get to the lower area before it makes any decisions. Now, our rules are no longer true for a trend trade immediately. I know it's going to be quick, but see how the triggers rolled over? So we don't have any rules for a trend trade yet. They're going to put in a little battle here, and then we'll find out if they really like this area. If they put in a second divergence or something like that, then we'll see what happens. All right. Remember what I said was going to happen on gold? Without going too far, this is very typical. You get your first bounce up, and then they come back down and retest the area, and then they're going to make decisions right here. And I don't know what the answer is going to be, whether it's going to be a bottom or whether they're going to break through. We'll find out in a minute. 23.1 on gold so far. Yeah. So like you said, if the 21.3 chart is down, we'll be leaning a little more to the downside. You can do the same thing on the NASDAQ. Tell me which way should we be leaning on the NASDAQ? Should we be looking for easy long trades? With this, let's just say hypothetically you use this chart. No, it's not easy long trades yet. Now, we're probably still going to get a bounce, but again, long trades could be short-lived on the NASDAQ, and we'll see what happens. I mean, it's been a nice uptrend, but all right. I don't want to jump around too much because okay. Yeah, first 5 minutes gets, I don't know whether it's all the trading algorithms or whatever it is, but it does get volatile. Crude is a more subdued market for new users. Look, crude oil and the S&P are the way to go for you in the beginning. It's slow, it's easy. You have to have a little more patience waiting for the good looks. But if the large chart agrees with what you want to do, this is where gold is brutal if you don't follow your rules. Every market's brutal if you don't follow your rules. All right, guys, so look. Tell me what you see. Pivot stop out at the bottom. We're going to go back to midnight. Melinda said bingo. Would you go long, NASDAQ? All right, cool. I like it when my wife says bingo. All right, so look. Pivot stop out, followed by a higher divergence, makes the market go up. You can see we're a little bit range bound. Inside of that range, we have a termination condition, 1-to-1s, which says no more longs, which, could you have taken a short? Sure. Not a real great top because there's no divergence. This top for me is a much better top because it does have divergence. Does that make sense? It has divergence. So this is where, we have better odds of the market going down from the edge of resistance when there is divergence. And so far, they haven't really disappointed. Let's see where they might be going. All right, let me catch up real quick. I don't want to fall too far behind on your guys' pictures. So Zeba, I'm not sure. I mean, obviously I have a different, I don't know when the last time or what templates you have running, but when I look at the NASDAQ, we had that third divergence down. However, I want to go back and look at it. It was, I don't know what chart templates you're running. I know you've been changing out your chart templates a lot, but that third divergence down was directly into Fibonacci support. And not only was it into support, look, the other prerequisite for a good trade is to have wide, strong triggers. And this large trigger line look right here is not a wide, strong trigger by any stretch of the imagination. It's very pinched together. There's no range in the large trigger, so that's why it didn't go down. So not only because we didn't make it to the edge of fibs, right? So this is our fib window. It didn't make it. And they love to make it to the edge of the fib window, especially in a strong uptrend, which we had. So that being said, yes, you can have a third divergence and it might keep you from doing any long trades. But, if you had this fib here, obviously that makes a considerable difference. Now, once we hit the top, then it's a different story. Right? And then, as we discussed, there's a potential that this could be a low, and it ended up being a low, which was cool. And then we start to process over. Now we have a top that potentially could be a pretty good top for us. We'll see what happens. Anyway, we'll see. We got to kind of get out of this little bit of a range right here. I want to give you guys more perspective. Look at your 55.8 NASDAQ chart if you have it. Tell me what you see. I see divergence with a lower divergence from a fib. What do you guys think? So again, I would be very leery of any long trades on the NASDAQ at this point. The expectation is that, we're probably going to make it down to 0650 at least, and then we'll see what happens. Just from this one chart. You guys see what I'm saying? I know there might have been a long trade on the smaller chart, and that's fine, but at the moment, we're in a situation where long trades are probably out for a minute, and we're going to have to reevaluate after things don't really have a long trade or a short trade that's worth it, so we'll have to wait. Okay. And the nice thing about the NASDAQ is you never have to wait that long. Oh, my God. Anyway, we weren't really looking at easy shorts. Weren't looking at easy longs. There wasn't really anything to look at, was there? All right. Let's double check on our gold, because we were talking about coming back down into support, which is fine. They did it. And again, this is another instance of divergence with a higher divergence on gold. We've seen this more than once, yes? So for now, gold is a no-go on going short for any reason whatsoever. I think it's been a no-go, but divergence with no triggers below it and a higher divergence with no triggers below the fib. So traditionally, that makes the market go up. The problem is the triggers kind of stink for it. So anyway. All right. Let's go back and take a peek at our NASDAQ. And again, we made a divergence and a lower divergence, and then we had a breakout. So we have to kind of put together some realistic expectations for ourselves. This one looks a little familiar, doesn't it? Kind of looks like that same trade from this morning where you have this look. One of the best looks we can get with Nexgen is strong triggers, breaking a fib, pull back to test it, and you get an opportunity. Anyway, looks something like that. So now we have to go back to our other NASDAQ chart and say, do we have something in here that lines up? Again, if you're 5-1 trend trading, the first 15 minutes of the NASDAQ is not for you. It is just not. Anyway, I think everybody could make a good case on why this area should hold. What do you guys think? Again, I'll put these two charts together and you'll see them. I mean, that's basically a trend trade off of your 34.5 chart. What do you guys think? And again, if it continues, then we're looking at, 818, 819 is ultimate target. So we've got to get through this last little bit right here, which the triggers are moderately favorable for doing that, being strong. Anyway, do you guys understand this? Once you get your large chart perspective of what should happen, the rest of what you do becomes a lot easier. So now every chart says up and we're getting through fibs. So, we should basically stay above this area if we're going to keep going to the upside. Everybody agree? And that's basically your line in the sand. Anything much below that, we'd have to reevaluate, but we should keep on cranking to the upside. Anyway, all right, I'm just going to put two charts together. We'll keep it simple. All right. And again, look, this is one of those situations where, we had divergence on the small chart. But I think everything is pretty much agreeing. I think we could still get down realistically into this window, but pretty much all systems go to the upside at the moment. 84 being the low end of the window, 87, 86 being the upper end of the window for a trend trade. Hi guys, what do you see happening before getting to the bottom of the? So if you're long, and let's just say you went long, what do you see? And again, it's quick because that's the NASDAQ for you. It is quick. Again, management, right? So if you got long, you put your stop below the pivot. Let me show you one of my favorite pictures. Bear with me. Because look, you get long and you're saying to yourself, hey, I'm going to stay long forever. I'm going to be rich. And then it doesn't go. Bear with me. Probably one of my most favorite pictures I ever put together for trend trades, because sometimes you have to do a trade more than once. And, that's the frustrating part about day trading, because, again, the NASDAQ is very quick. So, it is. Let me post this picture in here just so we have a copy. All right, that didn't work. Hang on, sorry. Try that again. There we go. All right, can everybody see this picture? This is where trading becomes a little bit frustrating for people if you don't have a good plan on what to do. And again, there are trades you're going to have to manage out of and that don't follow through. When to get back in. So I want to go over it first, and then we'll go look at our charts. Again, I think everybody can agree that if you're doing a trend trade, and, again, there's a couple of things that for us, will ruin a trend trade just from the smaller chart. The first thing that'll ruin our trend trade is if we get a lot of divergence against us. That usually tells us that the market's going to go lower. Anytime you see a pivot stop out, you can expect it to take out the low. If you get a third divergence, you can expect it to take out the low. Sometimes the market doesn't run in one chunk. And, you have to have some type of contingency to say, if I get stopped out or if I have to manage out, I don't want to give up if the market's still going to go up 40 points. So again, you have options. You can get in closer to the edge assertively, or secondarily, you can get in after the small triggers roll back up. And, again, there's two schools of thought, right? So look, I didn't mean to do that chart. Again, get in, get out, get in, get out, or get in, leave a bigger stop and hope for the best. Again, you have to kind of figure out what's best for you. But if there's something that beats you out of your trend trade when all the triggers agree again, all three triggers on your trading chart, get in again, because it's going to go back up. And then same thing, if you're trend trade long and something takes you out, especially, first 30 minutes of the NASDAQ does this a lot. They'll have something that takes you out and you're like those little freaking sons of, and you're like, God dang it. And they run. And look, if you just put your stop in to be a bigger stop way down here so they don't get you, they'll get you. Trust me, they're going to get you. So, again, the expectation that we're going up, which I still have that expectation, by the way, guys. Look, nothing has changed from my expectation that we're going to eventually get up to here. They may dick around a little bit and mess with people's minds, but eventually they're probably going to make it up there. That's just the way it works. Anyway, we'll see. We'll go back and look, but usually they make it. So sometimes they take you out and then you're like, damn it, I got to go again. And then you get, another opportunity. And this picture is super, super, super valuable, especially on the NASDAQ. Because they do this, they'll take you out and then they'll go anyway. And you'll be like, if you don't have a way to get back in, it's almost a momentum look, if you will. Small triggers with something. Does that make sense? So you're basically taking a small trigger momentum look, if you will, and you're using that as a second chance entry. Everybody, yes or no, you understand what I'm saying? The traditional trend trade's great, but if you have to, you got to take it again. Because look, there's nothing worse than looking up later and going, man, we made it, and I didn't get it. So let's look at what happened. Let's look at the real world here. Bear with me. Everybody get a copy of that picture? Put that one on your wall because you're going to use that one, I guarantee you, at least 2 or 3 times a day, if not 4 or 5 times a day every day. So let's look at what happened. You get in and they give you divergence and pivot stop out. And you're like, God dang it. So look, instead of just jumping in again and hoping for the best, waiting for the small chart to agree again. And again, maybe right here. They didn't make this easy, did they? So look, just having the same area highlighted. So maybe right here you tried one more time, and then maybe you had to do it one more time right here. This is the rudeness of the NASDAQ in the first thing in the morning. It's still the same area. And then ultimately, again, one more trend trade long in here. And we still have the same target. Nothing has really changed, and you might have had to do that trade a couple times. But you could see it, right? When you kind of leave that same area in as a box, and you're like, okay, that was my area. They horsed around, and I had to do it a couple times, but ultimately, they're going to end up doing what they're supposed to do. It's a really good time to break out that picture, wasn't it? Especially first hour of the, especially first 15, 20, 30 minutes of the NASDAQ. They can really be nasty, and then they end up going anyway. All right, let's take a look at your pictures. Alan. Bear with me. Let me open it up. Okay. So, you went long, you made a little bit, and then they bumped you. And then it looks like you went long again. And again, Alan, this is kind of, I like the way you circled this one. You kind of jumped in the middle of nowhere, momentum-ish, which is fine. You did a great job of getting out when they lost momentum, but you forgot to take the trend trade. Finally, everything's going your way on every chart, and you forgot to take that trend trade. But still a nice job of managing that momentum where you just jumped in willy-nilly in the middle of nowhere. All right, guys, look. This is right out of that same picture again. And again, for me personally, if you get a second divergence in the NASDAQ, you are screwed. It's not going. And it will, or it may eventually, but, again, you can kind of make a case for this is your line in the sand, do or die, right? Now, it's not a long trade because look at your triggers. I mean, it could be a long trade, but again, this is very typical. Our target didn't change. This is still the target. And I don't think anything probably changed on the large chart. Right? You just have to take it more than once or have a bigger stop, either or. Both of those things are very effective. And we are now coming up on decision-making time. Right? When we get up to these fibs, double tops, and our triggers are starting to get a little bit weaker. Can I step back just from the big picture view? Doesn't that look a little easier, calmer? Again, expectation was set that we're going long and nothing but longs. Just expectation. It's I'm going to either take long trades if it agrees or I'm not going to do anything. And once you get that, first little, hey, I'm going to go long or nothing. Now we got bingo. You guys hear people say bingo all the time. All right. Anyway, look, our expectation was to get to 19. Now we ask ourselves instantly when we get there, how many triggers are above 19? 20. How many triggers? Not that it can't break eventually, but that's the end of the party for now. It's very clear, very straightforward, very simple. That's potentially a top, and we have to wait and see how they react off of this area. So look, not one trigger. So it basically did exactly what it was supposed to do. And again, if you were trading it, you had to take a couple chances, but now not one trigger above. No more longs for now. It doesn't mean that, things can't change. They can. But does everybody see it? Longs up to that spot. Now we sit and wait. And again, it's not a great top yet. So, again, they usually almost never leave a top alone the first time, especially after a strong move up. They usually go poke at it again. Now, when I look at my market flow chart, again, I think the market flow chart adds a lot of value to what we're doing or what we're thinking. So again, if you were long, this was the second divergence that made it go lower. It went lower to fibs 1-to-1s in a high volume area. And then this is the same fib, so there's nothing different. It's just looking at it a little bit differently. You can see that the market flow chart also agrees that we have a pretty solid Fibonacci area in place. So again, this is, when we give you guys the rules, and you guys have those NASDAQ rules. That's ballsy. My wife says it was a nice top. She went short there. Anyway, she's probably about to start taking some money off now. Anyway, I'm going to leave her alone. I'm not going to touch her. Anyway, every once in a while you get to a top that you're like, man, that's really probably going to be a top. And sometimes you will do counter trend trades, but we're not going to talk about that. You're flat. Okay, good. 93.50, you went flat. Okay. All right, baby, let me do my thing in here. All right, so when we talk about tops and bottoms and we talk about edges, this is the first precursor for us for a pretty good top. They almost and again, if you do trend trades after a top, that's fine. But again, the first time back, they have a tendency to go a little bit further in the bounce. And again, look, they're going to make some choices right here. You see what I'm talking about? Again, this is a trend trade look after a top is in place. Again, if you get into a trend trade look, I think it's also prudent to not overcommit to the first trend trade short after a strong push. Is there news? Okay, I forgot. 10 o'clock news, so be careful. Anyway, this is the trend trade that it's a good look, and there's lots of parts and pieces to it, so I'm going to slow it down here for you guys real quick. Okay, fibs, no trigs above. Number 2, fibs, 1-to-1s. And remember that little market flow trick that I told you guys about yesterday? I put and the day before. This is another example of that trend trade short on the market flow trick. Where you have a white paint bar up into a trend trade short. Which market are you talking about? N. How did everybody just start using one initial? But N, I guess, tell me about it. If you're on the NASDAQ, I would say a 21 range chart. If you're on crude oil or S&P, an 8 range chart. All right, so we had our final news of the day. Let's see what we got. Forex Factory. Again, trading in front of news becomes very volatile almost every. So revised consumer sentiments, and it came out, and it is what it is. It doesn't really matter. So we had our employment cost index, a little bit of all the news is pretty much in line. There's not much going on, but it doesn't really matter. It's all over. News is over. Trade away. We're done with that for the day. So, all right, guys. Call it out to me if you see it and you know it. I have 2 green charts on my hands. Green 34.5 chart, which just tells me my small triggers are above my large triggers. So they're probably just going to go sniff around up here one more time and see what happens. And I don't know, they could break through and keep going up. I don't know what they're going to do, but at the moment it says up. I think we're going to end up making some decisions when we retest the high here again. So anyway, shorts were short-lived, which, look, this is a very typical thing. Right? So let's just look at it from a bigger chart perspective. Chart reading. Those who are in control of all of the money make the bigger charts change. And again, you know, we made our fib. That was awesome. If you took a trend trade short right before news, you hit your profit target. That's cool. But we haven't made a really big good top yet. And we might not. Who knows? The NASDAQ, obviously, they love to buy that damn thing. So we'll see what happens. So for now, 860, then 900 to infinity. I don't think so. All right, guys, look. Divergence is your first warning of they were sniffing around the highs. And again, I don't think we have a great large chart look to do a lot of commitment yet, one way or the other. I don't think we have a good commitment for a top here, and I don't think we have a great commitment for a bottom. You know, again, when I look at this fib area and I think of this as the, you know, key spot to deal with, I'm not overly excited about any of these looks in here just yet. Now, could it go up? Sure. Could it go down? Sure. As far as NASDAQ traders need to kind of chill out and wait, you know, it's got a little lean to the upside. Maybe they get to the edge of this fib, but I think this window is going to be our key window here. And I don't know, you know, what's going to happen, but look, all I know is that if we break out of it, we have a long way to run. So if that's what they want to do with their Friday, I'm cool with it. Makes no difference. This one's very similar to the first one I showed you guys this morning, which you had divergence on your smaller chart, which means they're probably going to go lower, which they did. This is called the meat grinder in right here. This is the kind of look where they could go long, they could go short, and if you're jumping in, jumping out, you're going to get ground up like ground beef. So, we'll come back to this, okay? It's got to lean to the upside. You know, I say these kind of words, I want to make sure you guys see what I'm talking about. Right now, the small triggers are above the large, the mid-band and fib are holding. I don't have any reason to think we've made a good top yet. So it's got to lean to the upside. We'll see what happens. That's my story. I'm sticking to it. Small chart has 3 divergences. So like I said, we're in the meat grinder right there. So let's look at something different. Not so nice. All right, so crude was going down, and then we put in divergence at the bottom. And again, look, divergence and triggers rolling, that's the first precursor to think that we're going to get to the mid bands and 1-to-1s, right? So I'm talking about in this area, you can have an expectation to get to the mid band and 1-to-1s, which they did, but I doubt there was a trade in there. It doesn't look like it. When they get to the mid band and 1-to-1s, we have to ask ourselves what's happening. And if they continue, then you guys probably had one crude oil long trade, if I'm going to take a guess. Did anybody do a crude oil long trade, trend trade? It's the only trade that could have been done if there was any trades to be done. Shogun, you did one? All right. Does everybody understand this? Just because you get to an area doesn't mean it's going to hold when the triggers are real strong. And when they break through, that's okay. We can do one more, and it looks like they're still breaking fibs, so ups or nothing. What do you guys want to talk about? After this week, we've had chart reading, a lot of chart reading. We've talked a lot about, building I need to see a good look to really have high probability trades. And again, think of yourself of doing, 10 trades a day or less. I think anybody who starts going over 10 or 15 trades in a day, it gets harder to make money because there's not that many great opportunities. Usually means you're making up stuff. All right, guys, we are still in the meat grinder. And I say that kind of jokingly because, look, we've got nowhere to go up here and we've got nowhere to go right here. They're going to eventually pick something. And I don't care what it is. If it's down, it's down. If it's up, it's up. That's fine. How do you catch the tops? I don't think I've ever said you should catch a top. It's like catching a speeding bullet. It's a dangerous thing to do. I don't think I'm going to give you any good thoughts on catching a top. How's that? Or bottoms? Yeah. What we're looking for, more importantly, is we're looking for the top to happen, and then what happens after that. We're not trying to catch the top. We're trying to see the top and then wait for a condition that's more favorable for the short side after a top. Does that make sense? We're not trying to catch a top. We're trying to see the top, wait for its top and then condition and then trade. Or its bottom and then condition and then trade. And right now it's, we don't have either. It's ugly, so we're just going to leave it alone. How do I see the tops? What do you mean the screen only has one? How many do you not have 4 monitors, Shogun? I go back and forth just by clicking the tabs at the bottom. See, so I've built an extra tab at the bottom, and you can build an extra chart in there, but I don't recommend doing it this way because you can't really watch it unless you click on the button. Right? So if you don't click on the button, you can't see it. I think having multiple monitors is a much smarter way to look at multiple markets. I I only did this so we have, so I can quickly go between, instead of sliding charts around or changing workspaces, I did it this way. All right. Yes. The problem is you're never going to be that great at day trading 6 instruments. I don't know anybody who can do it. I mean, maybe 2, maybe 3 tops if you're looking at larger chart moves. But you just don't have the ability to focus and manage properly when you have too many markets. All you need is 1 or 2 and do really well with those 1 or 2, which goes back to what we were talking about this morning, which is how much money do you need? If you need $1,000 a day, you only have to trade a 2 lot or a 4 lot and get 1 really, really good trade or 2 really good trades. So it's more about waiting and waiting and waiting for that one, it's like waiting for the perfect, you've seen all these movies like Ocean's 13, Ocean's 12 and all that. They're not out robbing small little banks all day long every day. That's not what they do. They go for the one big score. And I think, that's what we're trying to do with this, is we're trying to juice the odds in our favor. So everything's going our way on every chart. Like, for example, let's just say gold, right? We're in a situation where on gold, number one, we saw the bottom when it happened, right? And we said, hey, there's no triggers below it. And ever since then, they've never done anything to make us think that it was anything other than a bottom. In fact, they've gotten better and better and better at being the bottom. Divergence, higher divergence, yet again, higher divergence. So it should be longs or nothing on gold. I'm assuming you guys have some either long here or long here. Longs or nothing on gold. Everybody okay with that? And I don't even have to look at the small chart. You can look at the small chart to fine tune your entry, but it's up or nothing. And you have to start with that first. So, you might be better served having, an entry chart where you have 2 or 3 tabs at the bottom, Shogun. So, and then maybe have your big chart separated out and running on, the other. So that way, if you see your big chart has something that you want to do, you can have all of your entry charts on one like this. Does that make sense? Shogun, you went long on gold and made big money. All right, cool. Look, I mean, tell me if I'm off base here, guys, on this gold, but this is exactly what we're looking for when we're looking for gold and long trades. You want everything to be going up, and specifically, you want a good condition before that. Divergence, higher divergence. Is there any other place where you could have made this trade when you look at this chart? There's literally nothing else on there. I don't know which template I'm running. I don't even have tick replay on. Anyway, long story short, longs are nothing on gold. Hopefully you guys got one, for those of you who are gold traders. Now, where are we going? I mean, obviously the first choice is here, but realistically we will make it to the next fib or the next fib up here because of the quality of the bottom and what we're doing. So if you're long, right, these are your targets. Prior pivot stop out with a little 1-to-1. Next fib. All right. Somebody's at my door. All right. I want to go back to the NASDAQ for a second. Because again, guys, look, I told you I thought we were in the meat grinder, which you could kind of see You can see chop coming before chop happens. And, a lot of people ask that question. Like, how do you know it's going to be choppy before it's choppy? Because once it's choppy, it's easy to see, right? I think. Before it gets choppy, and that's why I called it the meat grinder. It's the meat grinder with a little lean to the upside. But resistance could hold based on all the triggers and fibs. And support could hold. And they really have a tendency, especially on the NASDAQ, to once they get in this little area, they chew it back and forth, and they break out the top by a few ticks, and they break out the bottom by a few ticks. And you're really kind of forced to wait for something a little more solid. Now, when I said we have a lean to the upside, this is what I mean by that. Looking at a larger chart, I think the path of least resistance based on the trigger lines on a larger chart leans to the upside. You see what I'm saying? I think a breakout to the upside with all your triggers going up on a bigger chart's easier. So it's a meat grinder on the smaller charts as they work it out. But I don't think we have any easy short trades coming up anytime soon. And look, I say that, and then all of a sudden it's going to be somebody lights a fire, and they're going to be hauling ass one way or the other. So we'll see. All right, guys, let me ask you one question. What do you want from me that I can give to you today? I'm having trouble with this. I'm having trouble with that. I don't understand this. I don't understand that. What is it that you need? What is it that you want? What can I do for you? How did our long on gold turn out? Crude. All right. I guess that went back up. Cool. Obviously, that went a long way. Doesn't look like there's any reason for crude oil to stop yet, but we did get to an area of interest. Again, look at this area. There's lots of fibs, 1-to-1, prior pivot stop out. I think we're in the make a choice camp of what's going to happen. Obviously, there's not going to be any short trades happening soon. So you can take your finger off the short button for now on crude oil. But I do think we've made it to a potential, this is an area of interest where if you were long or holding on for a big one, the spot where you have to really say to yourself, let me see what I'm going to do. For what it's worth, check it out. The two trend trades that I have circled here, I'll get rid of this, but I got rid of everything on my market flow chart except for my triggers. Just to try to show you guys something different. When the market flow agrees with what you're trying to do with trend trades, it usually works out quite well. One of my favorite management tools, because people always ask the question, how the hell do I stay in a trade longer than instead of me just jumping out? For me personally, trend trades that happen at the small triggers going down on the range chart. So the first place we really had a full bar, let's just say, above the small trigger, there was a down bar, but right in this area is the first time we even slowed down. See how the price bars were totally below the small triggers here? So when you're in your trade, you're like, man, I wonder if it's going to keep going. This is my personal favorite management rule. And it's hang on for a little more if you're outside your small triggers. Hell yeah, it does. Absolutely. And then look, ultimately, these are two overextended runs, so it looks really good, but we'll look at it in some other situations. And again, you see this same thing where it's like the small triggers are so strong and we're really above them, above them, above them. And, again, this was our Fibonacci area of interest. And I think you'll end up seeing the market flow kind of say the same thing at the same time. Anyway, it's still. So I ended up getting out at 1-to-1s and pivot stop outs and all that, which was, I don't know, roughly 17, 18. So this was 20 points almost right here. Now, it went all the way, but I wasn't willing to hang in through news and breakfast to get there. So anyway, 10, 15, 20 points is a really good window for your first target, but it just depends on what it says it's going to give you. Like right now, it doesn't say you can have anything except heartburn for looking at this. All right, now let's slow it down for new people. Again, let's go through rules since there's not squat to do on most of the charts. Let's go through the rules real quick and make sure we keep it simple for everybody. 90% of your day is just sitting here looking at the damn thing. We're waiting and waiting and waiting, and we're waiting for, if our small triggers, like right now, we're in this kind of choppy phase, so we're just waiting. Rule number one for any type of trend trade is going to be both small and large triggers crossed up. This is our most favorable look. And, again, on our NASDAQ chart, I'll keep it on the NASDAQ. Aha, look at that. They're starting to make a declaration on the NASDAQ. Look at that. You see what I'm saying? They finally said, okay, this resistance is cool. Now they've put in a little declaration that says, hey, we're lower divergence. Now we have a better shot. So look, pick your target first. Before you find your trade, you have to pick your target. So this is the profit target for short trades. Now that we have a second lower divergence, we anticipate it's going further. Do you guys understand that? We went through this a lot yesterday because I think it's a really good lesson. Once they declare fibs hold, second divergence, now we start thinking lower profit target. Which means what? Again, they're going to make it very difficult here because you have 1-to-1s, but you would have to trade into 1-to-1s, which makes it extremely difficult. Again, I think I wrote the rule. So look, here's the first picture I made for you this morning. So it says typically divergence, it goes down a bit further. And then more than one divergence, if you want, you can wait for a signal on the market flow or an up bar is not a bad idea. Everybody okay with this? I know we did this earlier this morning, but this is another case right here where you kind of get the same thing. So again, patterns repeat, divergence on the low. The market may go a little higher. So, all right, waiting for higher is not a bad idea. So again, you get choices. Can I get in at the mid band, which is fine if you did. Little higher areas here. And then ultimately, if you waited for a down bar or down signal on your market flow chart, this would have been your entry. Now, and I'm going to write one more thing on here. The reason why we felt compelled to think shorts finally was divergence, then lower divergence from fibs. Is everybody okay with that one? So here, I'm going to give you this picture. It again. And again, look at where I drew this box. I drew this box with the anticipation that we're going to make it down into this, 83 to 80 window, which in here, but we'll see if they can break through this time or not. Yeah, and this is where when I'm wondering what the hell is going to happen, I always can go back like this and I look at a big picture. And I say, where have we come from? What are we doing? What's the trend of the day? And so far, the trend of the day has been up pretty nicely. That profit target area that we were talking about on the smaller charts just so happened to be one-to-ones below the mid-band on the bigger chart. So again, these things, they kind of work together synergistically. So again, we had termination on this chart at the exact same place. We had fibs and a pivot stop out on the 34.5 chart. At the exact same place, we had pivot stop out, double divergence on the smaller chart. And that's all it takes to make a bottom, guys. I think she only traded the NASDAQ for the last... She has S&Ps up, but, comparatively, the NASDAQ versus too hyped up. But the NASDAQ can do it to you. All right, guys, look. Another case of divergence before a trend trade. And if you're going to think we're going long, it's probably going to go from a farther spot. May not go at all. We'll find out. Another good case of divergence. Wait for an up bar on your market flow chart. If, that seems to have been a pretty good pattern. What do you guys think? So look, let's look at the last two examples I put in. Another good benefit of the market flow chart. So divergence, it goes a little further, wait for a market flow up bar, get you in, some type of up bar. The other picture we have is same thing in reverse. Divergence on the low, especially on the NASDAQ because it's a little booger. It runs up a little farther than where you think it's going to be the trend trade. And then ultimately, look, even a down bar on the 13.2 chart didn't hurt you. But again, I'm a big fan of the market flow, and a market flow sell signal makes me feel even better. It makes a good case for having a contingency plan if it's not super perfect. Slowing that entry down by just a little bit. You got a bunch of magenta dots. And then you're thinking to yourself, I want to go long, but everybody else on the planet's going short. Not until this one bar did we even get a couple of green dots and an up signal. Now, the condition was over, so you shouldn't have been going long anyway. So that saved you from going long just watching what it's doing. If it's going up, you'll get an up bar. I promise. It's guaranteed. Anyway. It's not hindsight. Joel, it's not hindsight. It's conditions. Look, weaker triggers, especially with weaker triggers. I could ignore diversions with stronger triggers, but do you understand when I say weaker triggers, do you know what I mean, everybody, by this? So bear with me. Let's do it again. So when I look at these triggers right here, this is not the strongest trigger line look for us, is it? No, no, that's not the strongest trigger line look. So it's not just this not being strong, it's this not being strong, plus its divergence, plus it's no up bars on this chart. So it's three things. Now, if you wanted to go further, you could say it was technically four things. Because remember that bigger chart we had talked about? Going long would have been doing it into a pivot stop out. So not only did the three smaller charts that we were looking at say don't go long, if you were looking at this one, it could have also given you a hint that maybe it wasn't time to go long either. Anyway, food for thought. Not to mention you were below all of your, just to get even worse about it, you were below all of your large triggers over here, so damn sure none of the rules. I don't mind being a little bit below them, but all right, so the NASDAQ has a lot of movement and not always a lot of trades. There's nothing in here that I feel overly great about. Short term, we've definitely hit a bottom, but I don't see anywhere to go for long trades as far as doable targets. So there's no reason to think longs, no reason to think shorts. So I don't know what to say. All right, so here's our crude oil, and it's always fun to go back. When you draw a box in and you go, this is the area where we're probably going to run into some type of trouble. Why did I say that? Well, number one, it was taking out the high of the day. Number two, it was Fibonacci resistance with one-to-ones with... There's a lot of stuff up here resistance-wise. And the trigger lines got weak at resistance. So usually they end up going back down again. All right. Now, I want somebody to give me your bias one way or the other when you look at this chart. What do you see? Just to step back and take a look at it. Let me get this cleaned up. What do you see? First, look at the triggers and say up or down. Let's just start with that. Is that an easier way? Just look at the triggers, up or down. Cool. So if you're looking at your little charts, no matter what, you're not really looking for long trades, right? Shouldn't be, anyway. So termination condition, pivot stop out at the top of the second divergence, and pretty strong triggers down. I would say we're not going to take out 18 again unless we change our trend. But now let's try to figure out where the hell are we going to go. Remember that little fib that we never made it to, the second one? Well, I'll probably make it this time, and then we'll have to make some decisions. Been really range boundy, hasn't it? All right. There's nothing great happening, so if you're like, damn it, what do I need to do? There's literally not much to do. Anyway, does everybody understand this edge of fibs down here? This is the most likely window to get to before they make their next major decisions. But we have a lean to the downside, but there's not an easy look. So it would be really easy for them to come back up here and make a little pivot stop out at these fibs. But this is a very definitive. If they don't go now and they do decide to come back, I don't think we should really get above that. So I think these are the two windows in which we're operating at the moment. Anyway, nothing overly nice to deal with here at the moment. But like I said, based on this chart, lean to the downside is in play for me. I would love to see them stop everybody out and ruin their day and get to like 19. Because that would be the type of top up here if they got, let's just say they got here. That would be the type of area with the large charts helping that you could really start to look for momentum trade shorts. That's the type of spot you could do it from. Because that would be a really good, top area. And, if they stop everybody out and the edge of resistance holds, they have a tendency to zip on, let's just say hypothetically, they run up to here. Once they get up here, then you'd be really on your toes for momentum shorts to get down to here, if they don't just go straight down. Anyway, they may just go straight down, so. All right, let's look at our smaller chart. Yeah, we've kind of rolled into the smaller charts, not saying we're going to go back up. So the other cool thing is we know where it's going, right? We'll see if she gets there, but got to the first spot, but I would be surprised if they don't make the second spot this time. We'll see. All right, G, let me see what you got. All right, so this is crude oil, and it pulled back to resistance, and you went short. I mean, bear with me here. I see what you're doing, but again, this one is probably pushing it just a wee bit. I think this was your short. Sorry, that's not an arrow. I think this was your short right here. And this is your, hey, watch out. And the problem with going short over here again, tell me if I'm off base on this, but one of the rules says you have to trade with the large triggers and an area, right? So tell me if I'm off base here, but this is areas with the large triggers. And when I see this kind of gives me the feeling like, it's still an area, but I have divergences and my small triggers are up. I think this is the one that could go up a little higher, and you probably would want to wait for small triggers to roll over again. Remember that other picture I gave you? This one? Let's go through it again. It just looks similar to something like this where, you put yourself in a divergence and the small triggers are kind of not right. And I think it could go further and then it could roll back up. So I don't think down is a bad idea, but I think this is where it's for sure. And this is where it's starting to gamble. Does that make sense? Just without anything else, that you don't have the trigger line help here that you really want for a trend trade. Not that it can't go, but it's not. This one's super favorable because the triggers are involved, and this one isn't. Anyway, let me know. The first one? I was going to say what divergence. All right, so here's the hard part about divergence, okay? And I'll show you in the user guide because I think that's the better place to see it. Bear with me here. Man, it's been a while since I've been through the user guide as much as I have this week, for sure. So again, this is a very old picture, but it's still a good one. There's a couple of things when you're looking at divergence, Daryl. And again, divergence will make the market go back up a little farther. But when it's way outside of the triggers, or specifically, do you see this divergence here? It's divergence, but the triggers say it's still going down. Now, if you were short, you probably got out there, and that's totally fine. But so, there's two different instances in divergence where you say, forget you, divergence. I'm going to ignore you for a minute. And it's when they're really, really, really outside, or the triggers are really, 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 really strong. Right? Elvis, that's true. So these are the two cases where you're like, divergence isn't really going to mess with me too much. It might, in my trend trade, it might make it go up a little higher, which is fine. But so if it's outside, triggers outside the large, you ignore it, or don't ignore it, but it helps you think, it doesn't preclude you or stop you from doing a trade. And when the triggers are super strong, you can pretty much ignore it. So it's like it didn't even happen. It's just... So let's look at this picture again. So this first divergence, you have to kind of give me the lowdown on what the triggers are saying. Is it a divergence that's really going to do anything to make the market go up based on your fibs and triggers and its location? I don't think it really has a lot of bite to it. I mean, your small triggers didn't even cross up. Do you see that? So I don't think it's a divergence you really have to worry about, Now, when we get down, I mean, obviously we had a fib that popped up here, so that's a little bit different. So it's divergence that made the small triggers go up, which is a little different scenario. And usually this is the one that, it's just going to go higher. And if the large chart says down, probably this would be the mid band from another chart, right, Gary? So you'd probably go up to 81, 82 and then go down. Anyway, just my thought. Okay. You okay with all that, Daryl? So look, here's your big picture on the NASDAQ. Is there any reason to think we should be taking long trades yet? Just with this one chart. Forget about, any other charts, but what do you think? Long trades are probably going to suck, right? Okay. I just wanted to get that out of the way before we went and looked at the little charts. Let me clean up. All right. So here is where, if you were looking at just your small charts, you would have probably done a long trade. I'm just going to guess. If you don't have the big chart, you would be trying to go long here. And then all of a sudden it stopped working. Right? And again, why did it stop working? Well, I mean, if you went long here, it's cool, but this is another case of divergence. Think about the market going lower, and then think about waiting for an up bar to go long again. And let's say, right? I don't think we're going up, but based on the other one, but when you look at it from this chart, it's really easy to not take a long trade, right? And this chart's really easy to not take a long trade. But if you're only looking at these two charts, I have to be realistic for new users, right? When you're looking at this, you're seeing long trade or nothing but long trade, yes? Because this is all you have to work with, which is totally cool. So, if you did a long, you weren't wrong. If you got a fill. The only thing I would say is just remember where your triggers are located, large triggers. And then if you get divergence and the small triggers roll over, do you guys like this rule for the NASDAQ? I love it, but you guys can digest it as you see fit. How many times have you gotten your ass slaughtered buying right there? 60, 50, 120 times? I mean, I know, because if this is all you're looking at, this is all you have, and you're thinking, yeah, it's going to be a perfect long trade. Multiple times. So anyway, look, divergence with the small triggers going down. Just wait for a market flow signal or an up bar. It will save you money, I promise. You got that? Divergence, strong small triggers. Just wait for an up. You don't have to be first. All right. Sorry, it's moving. It's kind of stuck in a range here, man. This NASDAQ's just not much fun. We'll go look at, what do we got? Gold, crude. We'll look at crude for a while. Crude's been a little bit streaky today. Well, you never know it's going to be a signal until it's a signal. So if it's the right spot, right conditions, and up bar is enough. And usually it's a signal if it's the right spot with the right condition. Like 99 times out of 100. What's an up bar? Okay, so look. That's going to be the easiest one all day, Sophia. So check it out. Bars that close down are down bars. And then bars that reverse and close higher than the last bar are up bars. Right? So right now, live, this is a down bar. And then if this one closes up, that's an up bar. When there's an arrow, what does it mean? All right. Have you spent time I have to ask the question because these things are all very well defined over here. In the market flow section, so first things first, white paint bars represent breakouts in volume from prior bars and areas. So they alternate back and forth. White bar down, white bar up, white bar down, white bar up, white bar down, white bar up, white bar down. You okay with this? So first, that's what a white bar is. It's a breakout in volume to the downside or the upside. Arrows after, so here's the definition. But simply put is if you have a white bar down followed immediately by a up bar, it'll draw an arrow on it. So that's what it represents. It represents a white bar down and then a reversal in price immediately. So what's your next question? Can I take it? Can I use it as a trade signal? So look, let's read the directions again. Market flow signals are signals that will initiate an entry when the rules are true. So only when all of your trend trade rules are true and you need a signal to initiate an entry, let's say after divergence or 50-50 with divergence, that's the only time at which you would take a market flow signal. When your other two charts trend trade rules are true. Does that make sense? So you're only looking for a trend, whenever your checklist is true, that's the only time you're looking for a market flow signal. Right? Or only after a good top or bottom termination condition, we use the market flow high volume area line, which is also created from the white paint bar. So the high volume line is a white paint bar that has another bar closed. So you kind of have a volume breakout with a confirmation, and then you get a line. And if the line happens, with the triggers after a good Fibonacci bottom, then you can use the line as a entry spot to go long. But again, based on the rules, we only would look for a momentum or a high volume line trade after all of your charts agree that a top or bottom is true. So again, the market flow is not used very often, only when trend trade checklist is true or top or bottom is very, very, very solid and it's a good top or bottom. Other than that, you don't even need the chart. So look, the difference in market flow is white paint bar breakout confirmed by more bars generates a line. White paint bar breakout confirmed by more price action below it. Sometimes it takes a few bars to confirm it. Then the high volume area from the white paint bar gets drawn across as a line, and if our rules are true, then you can use it to define an entry spot. And sometimes you get a high volume line that's in line with your trend trade too. That's also helpful. Nothing wrong with that. So you can use it at the top if the top holds, or you can use it with the trend trade if the trend trade rules are true. So, one of them is, this is white paint bar without confirmation, the arrow. You get a white paint bar, but the market goes, no, we're not volume breakout to the downside. We're going to reverse the volume, and that's where you get the arrow. White paint bar up into a trend trade spot, that's where you start to anticipate that you're going to get an arrow to the downside. And again, I think when you look at these triggers, you can see that that's a trend trade trigger line look, right? That's a good look in the triggers for a trend trade. And that's, if you need something to get you in, this is helpful. So white paint bar with a volume reversal at trend trades, at tops or bottoms, white paint bar with confirmation, and then you buy a retest of the line. Is everybody okay with that? It demystifies it. Now, the other picture, which I think is probably the most important picture, is, where is it? This one. Stop trying to figure out the market flow. I hate when people go, I'm trying to figure it out. It's like, don't figure it out. You're not going to figure it out. Only when your checklist for a trend trade or a top or bottom is true do you start looking at it. Because if you stare at it, it's going to make you do crazy things because there's too many plots and dots and crap going on that's not really part of our trading scheme. Don't stare at it. It's like watching a welder weld. Again, just to reiterate, only when you have a top or bottom or your trend trade that you say, hey, I need some entry assistance, which, we've we've gone through a couple of these. So, again, I think, I think we've had a couple of good, a couple of good examples of this where, again, if there's divergence ahead of your trade or you're not 100% sure, it's okay to wait for a down bar or signal. There's no harm. Again, if you have weak triggers and you're thinking, man, I should probably do a trend trade, but I'm not sure, but weak triggers with divergence, another good time to wait for a signal or an up bar. And if you don't get one or your conditions change, then you don't do it just because it's an up bar. An up bar with the wrong condition is still not going to win. Everybody okay with that? You can't say, oh, I'm just going to buy an up bar anyway. No, it's still the wrong condition. All right, let me clean up my mess. All right, crude and crude, those are the same exact charts. That's why that didn't make sense. There's not a lot to do here, is there? NASDAQ longs, maybe. Let's look at the NASDAQ again. So look, they made a declaration down here at the bottom, guys. Again, you've seen it more than once now this week, right? Divergence from support and then a higher pivot with divergence from support. So we start thinking that we're going to be reversing the trend and going back up again. So look, we had one of those over here. And the outcome was pretty good that it went lower. And then this is our second one since 10 o'clock. We had one here, but these triggers never, these triggers right here never went down. So 2 divergences plus strong triggers, and we got 1 push to the downside. Now we have divergence, strong triggers up. There's 1 push to the upside. That was the only spot that lines up with our large chart. And because you have the multiple divergences on the low, that also tells you that, again, we may reach some farther areas. Right? So the first farther area is obviously here. We hit it at 30. Second one's at 37.75. That's the second farther area. Did anybody go long? I'm just curious. Again, I think this one lines up really well for a long trade right there. All right, T went long. Cool. There's no chart setting. I just used the generic dynamic Renko bar template on it. The generic dynamic Renko bar template on the big chart. Keeps it clean, keeps it easy. All right, G, let's see what you got. I don't know what this means. Did not take any of the market flow signals. Okay. Well, there's no market flow. Okay. Again, this is wrong thinking, Gary. There's only one place you should think about taking a market flow signal. Only when and only See what you're doing to yourself? You're driving yourself batshit crazy. Because you're like, oh, I didn't take any of those signals. It's like there wasn't any of those signals. That's where people get into trouble. Your checklist was to go long was only true at one spot. You see this? Triggers are up. This is your only look right here for your first rule. And then your second rule is buy a pullback to support in between the large triggers. So you had mid bands and 1-to-1s right here. So this is the only spot, if you said I need a signal because of whatever reason, this is the only spot where you need a signal. So this one's not a signal. This one's not a signal. You're driving yourself crazy not looking at what I just literally just went through. So I'm glad you did it because it's awesome, but only when your checklist is true. And you don't need a signal in that situation, but if you wanted one, only when your checklist is true and you're at the spot where you're doing an entry. So this one bar right here was the only bar that mattered because it's the only one where your rules were true. Does that make sense? So that's the only one. And if you got in after it, you were long around 817.50, let's just say 818, whatever. And if you went long at 818, could you have made your money? Let's find out. I think the answer is yes. What do you guys think? Anyway, that's a really good example of looking at the market flow at the wrong damn time. Now, what predicated this move up? Like I said, again, this one has a better bite to it because number one, it's with the trend of the day, but divergence with a higher divergence, strong triggers going up. That's what we're looking for, guys. I know it's, there was a whole bunch of not a lot of great in there before that happened. But if you stayed on your game, obviously, that's the one you should get. Okay, so looking at this chart, are you trying to tell me that the market flow gave a long signal right there, Shogun? Is that what you're telling me? I can get on board with that. What do you mean? This is the 13-2 chart. That's not a bearish look. Is it? I mean, you missed your fib by 2 ticks. I know Nexgen, you expect it to be perfect, but so can we say with weak triggers being 2 ticks away from the fib is enough to say the fib is hit? And then after the fib was hit and both triggers are strong, I mean, tell me if I'm off base on this, but I don't think I am. This is the problem when you start adding in more charts. When do you pay attention to what's happening right now, or when do you step back and say, I'm going to have a bias? You know what I mean? So there's always a little bit of a danger when you add in more charts and more things that you're going to have conflicting signals. For me, if the 8 range, 5-1, and market flow chart all agree, I think you're in. Let's look at it. So again, look, for me, I think it's best when you have 3 charts that agree. 3 agree, I think you're going to get a trade regardless of what the 21 says. So look, the way I read it is all the triggers are up strong. This is mid-band fibs and triggers going up. And you have a market flow signal there. That's all 3 charts at the exact same time saying the exact same thing. Everybody agree? And Derek, check this out. Look at that divergence up there. This is the one where you were saying, oh man, I might have problems with these divergences. Look at these small triggers, and what do they tell you about that divergence right there? Is it a divergence we have to worry about or not really? Daryl. Sorry, I said Derek. I meant Daryl. So again, this is a really good example of divergence that doesn't really mean squat. You have to learn to ignore that divergence or not worry about it. You see that? That divergence is not going to make you wait for a signal. If you did, it's totally fine. You still got long and you had plenty of room to make money, but yeah. We don't have to guess. You just have to read and react. Then when all 3 charts line up, usually you end up with the trade that wins. If you lose, then, it's just not your time. All right, I'm going to take a couple of minute break. When you visualize it and strip some stuff off, it really does look easy, doesn't it? And again, I think that's the hard part for new people is kind of saying, okay, which lines... I know for sure this is the part that takes a little bit of digesting. That's why I remove the lines, because when you really, when you're able to focus in on what's important, you still have to have your fibs and mid bands and 1-to-1s on there. It's not like I'm saying get rid of them. I'm doing this for effect so you can see when you look at what's important and the simple things, right? You still have to have your other tools on there, so you can't just go off and forget about everything. But when you look at it in this clean, clear perspective, this is the way you should see it, and say to yourself, is what's in my way really going to cause me trouble or not? And the answer is no, it probably won't. That's when you take a trade. Okay, let's see what our NASDAQ long was doing. Still going. All right. I'm going to take a short break, guys, real quick. Pause for the cause. So look, from the time we finally said it was okay to go long, the NASDAQ's only up 50 points. Is there anything on our chart to make us think that it's not going to keep going? There's really nothing to make us think that they couldn't keep going a little bit. I don't have to, but I'd imagine they're going to keep going. All right, I'm going to let you guys watch it. I'll be back in a minute. Yeah, that's all you need. You just need a couple where everything lines up and You know, it's hard to wait for those. I'm not saying it's easy, but think about what we're saying here. It should be the easiest thing to do. You don't have to do anything, literally nothing. Literally sit there and just wait until multiple divergences and strong triggers and everything's going your way and you pop off and catch a little bit and do it a couple times a day. That's the winning recipe, guys. All right, I am seriously going to go take a break. I'll be back in just a minute. You guys put in any questions, comments, concerns, anything you guys would like to go through. I'll be more than happy to go through it with you. How many of you guys have the market flow and know exactly why you should be going long right there too? Not only is it a trend trade, but the market flow is really nice right there too. I love my market flow chart. I can't stress it enough. I mean, this was the first long over here. This is high volume. This was your second long. This is probably your next long right there after you break through fibs. Market flow is awesome. Once you get used to it, you'll never want to be without it again. I promise you that. All right. I'll be back in a minute. You already have it. You don't have to download it. Just build a chart. And if you don't know how to build a chart, this how to build a chart instructions, it's a crazy thing, actually is building a market flow chart. So just follow those directions right there and you'll be good to go. All right, I'll be back in a minute. Short break. All right, guys. So when we look at it, this is a really, and again, not that it has to be a top or anything like that, but when you start saying to yourself, I want to have a top that, every chart agrees with, this is how you start to build that look. You see how, and again, I'm saving this off just so we can talk about the potential, and again, I don't know what's going to happen, but we're going to talk about a potential great top way before it ever is going to happen. So first things first, remember we have, this is a 55-8 chart. And, once we broke out of fibs and we had strong triggers and we got through 1-to-1s, now we've made it up to Fibonacci resistance. And when we get to Fibonacci resistance, you can start to see how these things build themselves together. See how the small triggers are in between the large triggers? So not only are the small triggers in between the large triggers, but the bodies of the bar are way below the small triggers. So we've got a weak trigger line going into 73 as a fib area. As we look at our 34-5 chart, we've got the same thing. We've got small triggers in between our large. Again, they're going into it with some strength, but that's how we start to see the potential of a top. Now, when we look at our smaller chart, our 13-2 chart, we've got divergence, which is the first warning sign that we could be putting in a good top. And then when we go to our market flow chart, we want to see the behavior of the bars at Fibonacci to give us a hint on whether the buyers are still kind of in control or whether the sellers are in control. So they've already thrown out the first little warning to us, which is what we call an antenna bar. Do I have to explain why we call it an antenna bar? I mean, you got it, right? It kind of looks like an old antenna. So anyway, that's an antenna bar, and it's, you could call it dojis or whatever the hell else people name these bars, but it doesn't really matter. All of the volume on that bar was at the fib, and then they closed back down below. And then again, secondary is how many triggers are above our fibs. And the answer is none. So, whenever I say to you guys, when you're thinking about doing momentum trades from the top or the bottom, this is the precursor for one of those tops or bottoms where you're going to start perking up a little bit and going, you know what? Maybe if this thing holds up, we've got a good top and we can start getting in a little bit quicker. Does that make sense? So, and you don't get these areas a lot. There's not always, a lot of areas where every chart on the planet comes together. But if you can get every chart on the planet to come together, you usually have a better chance of a top. Does that make sense? Hopefully it made sense a little more the second way I said it. Anyway, we start to see these things before they happen, so that way we can be on guard a little bit sooner. Now, it doesn't, especially with the NASDAQ, just because they paused for a minute at a red line doesn't mean it's going to be a top. But we're getting some good signs, so far that they're respecting the area. All right, so going a little further with our market flow chart, again, so far so good. They're respecting the area, right? So we've got divergence with our little antenna bar from a fib. We had a white paint bar down. Remember what causes the magenta line? It's not the white paint bar down. It's the next bar closing below it. So it starts to build the high volume line in here for us, which you can see clearly at 70. And again, the only other really thing we need is for the triggers to not break a fib and to roll over. So again, we're in a situation where, if I was to superimpose the high volume line, it would go right here. The only trouble with it is, again, in a strong trend, sometimes being the first one to sell doesn't always work out. But without fear, even if you take a loss, again, I'd rather have them put in a pivot stop out and ruin everybody's day and then do a market flow trade, but sometimes you don't get that. The more the triggers roll down and the more we go down, the better off this. But you can see clearly, right? Everything was going up. Market flow long signals hold. It takes us up to the edge of resistance. Now, again, we'll see what happens. So if the market flow is going to work, which I give it a 50-50, but if it does, that's what's going to end up happening right there. See it? So we're going to run up. And again, I would expect it to not go very far past this. If it does, we might have to recalibrate it. I have a better picture that I love. And I'm going to tell you why this market flow is not my favorite, but we'll still watch it anyway, if it even gets up there. I want to show you what my favorite market flow picture looks like, so there's no question, okay? Because this is kind of where we're at right now. This picture has every example of everything you could ever do. So we're in this situation where the fibs hold and we get this first little market flow thing, and it doesn't really stop the market, especially if, under subsequent bars, if the large triggers keep going up. We don't want to sell fibs when the triggers are past the fibs, if that makes sense. So sometimes you get this first little market flow bar where you get a down bounce, but don't be overly committed to it. And then the triggers are way above the fibs. And then, eventually we get multiple divergences. You're going to say, damn, I recognize that pattern, John. Divergence, lower divergence. And then ultimately remember what it is, guys, every trade, it needs three things. It needs the triggers with momentum. It needs an area inside the triggers. And it needs room to a target. And again, the difference is when you're looking at the market flow is, you can use the market flow, but you really want to have triggers at the same spot as your market flow line. That's the secret. Just like a momentum trade, you want the small triggers at the area you're buying. Does that make more sense? Hopefully. And the more the triggers are at the area that you're buying or selling, the better it's going to be. So, here's my question to you. At this high volume area right now, God bless it. Where did I put it? Son of a biscuit. Messing up my thing. How many triggers are helping the high volume line right now? Look, you'll be able to answer this pretty easily, but how many triggers, and I'm not saying it's not the right spot, but see how there's no small trigger help there? The large trigger that's there is not super favorable for going short, is it? It's not super favorable. So I would expect they're going to go, if you went short right there, it's going to be okay, but you don't need to risk more than a couple ticks. Feel a little better after a signal, but if you did go short, now you've got a spot to put your stop, right? You don't want you don't want the market to go any further than that. Anyway, market flows are either really great or it's going to be over very quickly. They usually don't horse around that long. I do like that the large sugars are trying to bend. There's not a lot of momentum in them, but they're trying to bend. I did say it was the type of fib area that could be a top, right? On every chart. So that's good. We got that one out of the way. It's not the best trigger line. I was going to say mediocre. And again, if you were short there, I would not have a lot of risk because if it doesn't go right away and it takes out that high, we got to start over. Which again, I'm not super happy with the triggers. Does everybody understand what I'm saying when I'm saying I'm not super happy with the triggers right there? They're just not strong down. So when they're not strong down, the NASDAQ is super notorious for taking out the high and doing it again. Anyway, we'll see. Check this out. This pretty much sums it up right here for your market flow short. You can see why it's in trouble, right? I mean, just because of the triggers on the range chart, that was enough to say it was in trouble. But, you know, this is where they go sprawl up to here and stop everybody out, and then they make a good top. We'll see. I think let's just say devil's advocate, okay? If they do stop again here and go down, then we'll be able to really not only look at a good top, but we can also look for some momentum trades. If. All right. Trying to figure out how to do this. Do you guys want me to leave it like this so you can see 3 charts? You can see on your 5-1, I was going to say 5-1, 13-2 chart that you're pretty much screwed going short right there. Which, you know, again, I love a good high volume line, but I don't like it when there's not a lot of trigger help. Anyway, they're running up. They're going to mess around here. You know, you end up in the meat grinder again as they're figuring it out. The people with all the money already know the answer. I want you to think about it. If I'm JP Morgan and I have 20,000 contracts to sell right here for my clients to hedge a portfolio, it's not going higher. Every time it goes up, I'll just sell some more and sell some more and sell some more. If it's the right area, which we don't know the answer to that yet. Anyway, like I said, I wouldn't be surprised to see them run up and take out the high. And then, look, we're going to start this process over again. Sometimes going short the NASDAQ is a tough thing to do lately, isn't it? Anyway, do you get the idea on this market flow? I mean, it's a cool little market flow, and if you sold right there and got your stop down, protected yourself, you're okay, but it wasn't the best. We could do better. Let's just put it that way. All right, so we now have the edge of fibs. Edge. Now I bet you now they're going to make the real decision on what's about to happen. Down from here, you could get more down. Obviously, I guess if we go through 82, then we got to start figuring out where the heck are we going. Which could very easily happen. Let's just take a quick peek. If we keep going up, let's just pick a number first, okay? A farther away number. So this is your farther away area. Everybody okay with that? On this bigger chart, not the little chart. So on the bigger chart, we'll have to see. I'm not totally convinced yet, but starting to build a thought of breaking above red fibs. Mm-hmm. I do have to say that I think we have a good support line in the sand. High volume line with fibs and triggers. I mean, this is your very definitive line in the sand for going up. If we're going to go up again, we're going to retest this area right here, and then they're either going to go straight up or that'll be the end of it. You understand that? Since we're at the edge of fibs, it's like, it's like that last one sometimes becomes a bad one. But the market flow is very supportive of 72 being another up. So, again, I'm not saying buy 72. I'm saying 72 and then maybe a signal. We'll see. Or if they rip through 72 to the downside, then we will know the answer to that too. So I think 72 is our line in the sand, one way or the other. Above it, we probably keep going up. Below it, it's a little overrun. Seems easy enough, right? So, and the more it goes up, the more we think it'll continue up. All right, questions, comments, concerns, things you guys want to go through. I know it's 11:45 on Friday, and you guys have had me all week, and hopefully we've had a good week. All right, let's see what you got. So this is S&Ps, right? So the ES with every chart going up and all the triggers going up. Yeah. Personally, I think that a 13 range chart's too big on the S&P lately. I mean, it's not really small enough to be helpful with what you're doing. I don't think. I mean, I'm not sure exactly what you're using it for, what your rules are for using it, but a 13 range chart, especially on the S&P, is not fast enough to be in line with a 5-1 chart, if that makes sense. I mean, if you were using 8-2 as your entry chart and 21-3 as your big chart, then 13 range would be the right appropriate number. But I think you jumped one Fibonacci number too much to be helpful for this chart. Just my thought. Yeah, change it to an 8 range and see what you like. All right, guys, line in the sand time. Here we go. Now, this is another instance of what we talked about before, right? Weak triggers on the big chart with divergence, and what are we going to do? Are we going to wait for a signal? We're going to buy on the way down? We're going to wait for an up bar? What are we going to do? It's the same exact situation we were in earlier, guys. Remember? The last spot, divergence before it, weaker triggers. Now, sometimes in a strong uptrend, you say, I'm going to buy it and screw it. We'll see what happens. But so buy here with HVA or wait for a signal. How are we going to do it? All right, so we got a signal. Again, look. Let's see. What the hell? did something wrong. So we got a signal. Look, if for some reason the signal doesn't work, then it's going to be party over, right? So here. So look, you don't have to risk a lot of money once you have a signal. You can actually risk less, because if it goes down, and let me go through this with you guys. And again, there's two schools of thought. My thought is we're going to make it to 72, but I just wanted to show you something that I think is beneficial, even though I think it's probably going to lose. So look, we had a signal. And you can run your market flow, you stop below a market flow signal. Or if you want to take the alternative stop, is you're going to have to put your stop. So anyway, look, there's two ways to think about this. Okay, I think I might be out already, but I was just trying to snap a picture real quick so we could freaking talk about it. Because there's two schools of thought. All right. So look, we waited for a signal and a little pullback. And now look, we're risking, what, 3 points? That's not that big of a deal, is it? So I have 3 points risk. Because look, if we take out the signal, I want you to look at it for a second. We're going to at least go to 72, and then there's no guarantee. I mean, I think 72 would be probably where it's going to go to, but if you get another signal, you can always do it again. If you don't get a signal, then it just keeps going. So, again, there's two schools of thought. My school of thought is place a limit order, put one in here and put one in at 72 to add on, and then put your stop way below it and hope for the best. That's one alternative. Second alternative is signal, put your stop below and take it twice if you have to. I don't know if that's helpful or not. Let's see what happened. Okay. And that's why you don't put your stop exactly in front of a high volume line. Anyway, there's your other school of thought, which is you can go long again. I didn't do it, obviously, but anyway, with stop logic, look, stops are supposed to go where the market is not supposed to go. Anyway, that's going to look really crappy, especially when or if we end up here at 37. It's going to be like, you got stopped out on the low tick. Anyway, that's okay. If there was no other lines here, stop below the signal would be the right way to go. With the lines right there, that's a really piss poor stop, and I would not want to do that in the real world. That was on simulator, so there's no harm done. But I would not want to do that in the real world. I'd say, come get me. Yeah, we're going up. Look at how bad it looks. It looks bad. Did you put it at the high volume line? Your entry? Where are you guys long from? Anybody? Or did you guys get out? Hopefully you didn't do anything silly like that. I was trying to make a lesson for you guys. And anyway, I guess I could have put my stop farther away and made my lesson, but all right, Sophia, see what you got. All right, long, and you just took the money. Cool. So what do you have to do, guys? You guys are going to have to get comfortable with this idea of this high volume line here. You don't have to watch it very long before you realize it's super helpful as far as support and resistance and not being on the wrong side of things. Anyway, my stop looks horrible. Your trade looks awesome. Look at the entry you got. Yeah, well, this is almost identical to the first trade I did this morning. You remember the first one I made a big speech about? Of course, I made it look like crap right now, but hang on. the very first one I did this morning was... And it started a whole lesson today, and I actually just didn't follow my own lesson. I can't find it. Aha. This was the lesson, number one, that we were going down. I think I made some other pictures. I don't know where the hell I put them. Gosh darn it. Anyway, this looks very, very, very familiar, and you guys will see this more often than not. We've seen it a few times today already. When you have divergence, sometimes they'll go a little bit farther. It just so happened, that, this looks very similar to what we have going right now. Put it this way. Right now, if I was really trading, I'd have heat coming out of the top of my head for making such a mistake. You guys ever get that heat coming out of the top of your head feeling? Anyway, I'd go back and go, what the hell? And like I said, if you did put your stop too tight, you'd have to take it twice. But anyway, I would definitely have heat coming out of the top of my head. All right. Now, what's in our way, guys? Between us and the promised land of the next red line? Not much, is there? You know what happens when there's nothing in the way? It goes all the way. And if you got out and took a few points, it'll never come back. You'll never get a retracement. It's going to go one way all the way and never come back. Isn't that the way it seems? All right, so that's pretty much locked in to going up. Let's see what else we got going on. Crude oil is still just kind of, it's in the funk here. Crude oil just gave up for Friday. This is a really good bet that the crude oil party and the crude oil traders are gone and the party's over. Not saying that they can't do something, but they are really stuck in here now. There's nowhere to go on crude oil, so I'm not even going to mess with looking at it again for now. Let's get some gold assessment. Now, this is the 5-1 gold, which that's not what I want to watch. I want to watch the big one. So let's recap gold. We had fibs at the bottom, higher divergence that made it go up, higher divergence that made it go up. We had fibs and mid-band hold, and then the triggers rolled up that made it go up. And then we got through some fibs, and we're kind of losing a little momentum in here now, it looks like. So, again, there might have been one more trade in here, which I think you can see pretty clearly. One more trend trade that, the very standard, very typical trend trade party ender from hell that happens all the time. Second divergence, lower. Second lower divergence, party's over. That's about it for crude oil, or gold right now too. Anyway, all right. We might be out of stuff to talk about. All right, guys, homework for the weekend. 3 things that I really want to make sure we cover. Number 1, on the resource page, number 1, and in the trading guide, I have added in what I think for a new user is one of the most important things that you can go through, which are these prop firms. Beyond Simulator, right? I mean, once you actually get to the point where you say, I think I can do this, and you've got the basics down on trend trades, then trade somebody else's money. And again, it's still sim for the first, week to 10 days with these guys. But then if you pass it and you actually make money, they're going to give you an account. And the worst thing that will happen to you, the worst thing, because look, you're going to pay a price. Okay? Listen to what I'm saying. This is super important. You're going to pay a price to find out how good you are or how bad you are. And you're going to pay a price to see how screwed up your psychology is or if your psychology is really intact. So the price tag can be a ton of money out of your own pocket, or the price tag can be $35 for a $50,000 account. Which price tag would you rather put on finding out how good you are and how deeply your psychological issues run? Because every day trader learns the rules in a week. It's not about learning to read the triggers or the rules are pretty easy. Reading the software after a month or two becomes really pretty easy. It's battling the psychology in your brain that gets expensive. It's not that you don't know what to do. It's that you don't know yet how to control your emotions and your psychology and keep yourself from doing crazy things. Tell me if I'm wrong, but anyway, and again, you're not going to know. If you trade on simulator, there's a thing called Simulator Millionaire where you never lose and you're always brave and you're tough as nails and you do the right trades and you don't move your stops too quick and you don't get out too early because who cares? It's a simulator. So this is the this is the easiest, cheapest way to put yourself under some of that real stress of really trading where somebody's being serious about it. And if you do this first, I promise you're going to be look, if you win and you're just great, then so be it. You win. You get to keep all the money. There's no downside. But if you're like most of us and you realize that you have some issues that you're going to have to work through, then this is going to be such a better way for you to do it. The other benefit is you don't have to pay NinjaTrader for a license. So you save money there, and you don't have to pay for a data feed. So you're actually saving money in the long run by doing this. And you get an account. It's so 100% a no-brainer that everybody should do it, period. And there's not a lot of things I say somebody should do for sure, unequivocally, but this is one of them. All right. So, again, look, that's fun. The NASDAQ went down, but they told us that they might be done right here, right? So a couple of divergences. What are you going to do with a couple divergences? You're not jumping in anymore, are you? That's another perfect situation for wait for a market flow signal. They might still keep going. Who knows? Yeah, it's 80% off on the Apex. So if you're going through our site right here, this will put it in for you automatically, but I just posted the code. Now, when you're filling this out, you still have to type in, it should put it in for you automatically if you're going through our website. You shouldn't have to put a code in. But if for some reason you're not doing it from our website, make sure you type in save 80. So look, can I do this one more time? Because it's just such a great example of what we've been talking about all day and how it's just going to save your ass sometimes. So look, 2 divergences with weak triggers, and just wait for, and I know whatever came out, whatever, but just wait for an up bar before you go long, and look at that. you never got an up bar, you never took a loss. You see that? Zeba, you're at 5 accounts with Apex. Cool. Look, my suggestion for a newer trader in your first month or two, few months, just get 1 account. Don't get 20 accounts, because if you blow out 20 accounts, it gets expensive. Get 1 account and make it pay. And here's another, can I give you something else? Apex is so freaking inexpensive. I was going to say cheap, but it's inexpensive. So it's, it's the best one for cutting your teeth and for being new. And then for, this one, I'm actually digging a lot because you can actually take your funds out after the first day or couple days of trading live. So they don't have the longer, and everybody in this business is changing right now. They're all in a battle to say who's going to be the cheapest, who's going to pay out the fastest, and who gets, so it's good for us. There's a lot of competition for the money. Yeah, but you don't even need that if you just click on the link, it puts it in at checkout already for you. You don't have to put it in again. Elvis. This one, my code is 1618, our Fibonacci number. Sometimes their website loses the savings. This one's pretty cool because they're giving you 40% off your account, but then once you pass your account, they give you another account free. So they basically give you 2 accounts for net 70% off. But they put a stipulation as you got to pass one before they give you the other. But this one pays. This one, I think, as far as drawdowns go, is a hell of a lot better. Because Apex has the open equity drawdown. These people have a whatever you made or lost is your drawdown. So you get paid out day one, plus the drawdown's a little bit easier to keep up with. It's not that hard, but anyway. If you're brand new, Apex first, and then once you actually pass and you start heading in the right direction, the nice thing is with a trade copier, you could do one of Top Step, one of Take Profit Trader, one of Apex, there's a lot of them. There's 50 different firms out there that want your trading abilities. So the sky's the limit on how many different firms you use and how many different accounts you run. But first things first, get paid first. And then once you start getting paid, you can add on accounts. I think that's a prudent way of doing it. Anyway, my 2 cents worth. I did put that in there on the, and I'm not going through their pros and cons very much, but I did put a little bit of just the basic overview on our page right here. Look, I'll just give you the answer. Do Apex first. Whenever you are in a position where you may blow out your account and you're not 100% sure yet, go with the cheapest one. And then once you're done with blowing out accounts, then add on the Take Profit Trader. But it's Apex first, period. I'll make your life easy. I'll just tell you what to do. Apex first, and then Take Profit Trader second. How's that? Easy enough? Amen, Elvis. And on that, I'm pretty much done for the day. Unless you guys